Well, howdy there, folks. Welcome into today's reaction video. First one up here is Elon Musk talking about GM and Ford are going to go bankrupt in the fast lane. I want to kind of give my opinion and perspective. Appreciate everybody joining me as always. Thank you so much for being here, folks. Thank you for being subscribed, new all-time high subscribers. I appreciate each and every one of you for being here. So, last night, Zero Hedge says Biden says he agrees with UAW, the United Auto Workers Union, basically should see a 40% increase in pay, right? And so Elon Musk responds to that. He says they want a 40% pay raise in a 32-hour work week, sure way to drive GM and Ford and Chrysler in bankrupt in the fast lane, right? And so there was Elon certainly didn't have to make that comment, right? But he made the comment. And so that definitely kind of shows that Elon's of the belief that those guys are going to go bankrupt in the fast lane in this situation, especially if, the United Auto Workers Union gets what they want here, right? And so what's my opinion on that? I think, those companies are just in a brutal situation no matter what. They're trying to transition their businesses to electric vehicles. They're trying to transition to self-driving vehicles. That's something that's going to play out over this next 5-10 years in a massive way, and they need to fully transition. By the end of this decade, you need to have your vehicles be able to drive themselves, and you need to be fully electric by the end of this decade. Those are two very extremely hard things to accomplish in themselves, right? Almost all those companies already have massive debt loads that they're carrying around in a higher interest rate environment, which is not great. Higher interest rate environment is also not great for demand simultaneously. And now if you're talking about a substantial pay increase, you just can't deal with that. So like I said, in regards to these companies, if they want any chance of survival, they got to transition to EVs, self-driving vehicles, and they're going to have to likely end up over the coming years, transition a lot of their production down to Mexico. That's what will end up happening in the end. So we'll see, but I do agree with Elon that, this whole situation is going to fast track those companies into bankrupt. Will I be shorting the stocks? No. It's not worth my time, okay? Tesla got a sell rating slapped on it today by Guggenheim on negative demand indicators. Tesla on Monday, basically Guggenheim put a sell rating on the stock. The firm sees supply-driven delivery declines in Europe and China for the third quarter compared to the second, and noted the negative demand indicators remain an issue with lower realized prices. Guggenheim sees third quarter deliveries of 445,000 versus a consensus of about 461,000 and 466,000 in the same quarter, same last quarter. Okay, so previous quarters on a sequential basis. The firm sees an average selling price of $44,350 compared to consensus, which is just about $150 above that. Okay. So, once again, is this any new news? No, we know demand for Tesla's not great right now. We don't know, is Tesla going to come in at 445, 440, 450, 455, 460? Does it matter for the long term? The answer to that is absolutely not. It's completely irrelevant. The long-term story with Tesla is intact. And you know what I thought was very interesting today in regards to Tesla? Did you see the stock price of Tesla? I thought that was very intriguing here today. I took a peek at this, right? I saw the sell rating, and I want to say, what did Tesla do today? It was green. We were up about $3,500 on the Tesla shares in the public count here today, which I thought was very intriguing. That it seems like investors are just kind of like bored of the whole demand's not going to quite hit. At the end of the day, I think most people that are in Tesla stock are really thinking about this over the next several years. They wouldn't pay the type of forward P the stock has on it unless you really believed in this over the next several years, right? We got another thing to talk about in regards to Tesla a little later on in this video. But yeah, folks, seems like Tesla's investors are moving past this whole, are they going to hit 445 or 450 or 455? People are they're bored of that whole story there, okay? Cybertruck units show impeccable build quality. Very exciting times with Tesla, obviously, in regards to the Cybertruck. We're not going to see it in the numbers, certainly, over this next few months, but you will see it in the numbers in 2024 in a significant way. And just a real bright spot. I can't wait to start seeing some of these on the road. It's such a divisive vehicle. Some people just think it's the ugliest vehicle in the creation of mankind. Other people absolutely love it. They can't wait to get their hands on it. Let me know in the comments section, by the way. Do you love Cybertruck's design? Do you hate it? Are you in the middle? Because I haven't really found anybody that's in the middle when it comes to Cybertruck design. It seems like people either love it and they would love to get one of these. It's like their wish list of one of their favorite vehicles to get if they could get it, right? And then other people just think it's the ugliest thing ever. So let me know in the comment section. I'd love to hear from you guys. I'm always intrigued with that, right? Elon Musk says Tesla has a performance Cybertruck. This is intriguing, right? So We're going to see what happens here. But yeah, believe me, Cybertruck excitement will be in full effect in 2024 around Tesla and Tesla stock. Okay, it'll be in full effect. And so, this hasn't really been the year people are excited about Cybertruck, obviously with interest rates being so high, and then obviously Tesla's just getting some units out there. But yeah, 2024 is going to be a very exciting time for Tesla in regards to Cybertruck. Now, this week we have a lot of very important earnings, folks. Actually, 4 super important earnings. Now, we're technically not in earnings season right now. Earnings season is technically over, and the next earnings season starts around mid to late October. But you kind of have these like straggler companies report at just awkward times. And we got 4 important ones this week. Costco's reporting. I want to hear from Costco any weakness in spending. Costco is one of those companies you usually don't hear about any weakness in spending because Costco just puts up the numbers quarter in and quarter out. If we hear any weakness in consumer spending coming out of Costco's mouth, that would definitely be a telltale sign that recession's coming in 2024. Fed lags are catching up, and you'll see some consumer weakness, right? So I think everybody should pay attention to what Costco says. You can read their earnings transcript they'll have, or you can listen to their earnings call on Tuesday night. I think that's going to be an important one, folks, important one. Now, I was looking at stocks today and a lot of things going on in the market today, and there's a few things that caught my eye. One was, of the stocks I own, Fubo was the best performing stock here today, with Qualcomm being the second best. But, when it comes to Fubo, Google Trends data is still looking phenomenal. This is the past 5 years for Google Trends data. And we should see a little bit of slowdown in Google Trends data for the next couple months here, but we got a lot of big things coming for new spikes of Google Trends data. F1 race in November in Vegas, I think it's going to be huge. I think that's going to be probably the most watched F1 race by far and away in the United States history for F1 races. It's going to be insane. So I wouldn't be surprised if I see a big Google Trends move for that race. Bowl games, and then you have the playoffs, NFL playoffs, starting in January, so that's going to be huge for Fubo. You have the Super Bowl in February, that's huge for Fubo, obviously, and then the Olympics in summer 2024, which is going to be huge for Fubo as well. So that's when you'll see the next major spikes in terms of Google Trends data for Fubo. So really exciting, next bit of time here for Fubo in terms of attracting a massive amount of subscribers. CMG, which is a stock I'm hedged against, right? It's interesting. I saw the stock was down again today. And this is when all the indexes were green. Dow was green today. S&P was green. NASDAQ was green. And Chipotle was down here today. It was down almost 1%. It's down about 8.5% in the past 3 months. And this is a hedge for me because I just looked at it and I was trying to get ahead of Wall Street. I'm thinking, okay, high valuation name. If comp store restaurant sales that have been coming in insane for Chipotle's weaken in any way, this stock's going to get crushed like a souffle. And it seems like there's a little worry starting to build in Chipotle, and I might have gotten in front of them here. We'll see. But their numbers have to come in where their comp store restaurant sales are kind of much weaker than they've been. If they come in much weaker, the stock's going to get crushed like a dang souffle, okay, as Elon would put it. And we'll see. We'll see what happens there, but it seems like all of a sudden Wall Street's starting to realize kind of the risk in regards to stock over this next, I don't think long-term Chipotle is a risky company. I just think for this next 6 to 9 months, it's a very risky company, okay? Now, Oracle fell again today, folks. Oracle keeps falling. It's down about 15% since earnings. I'm getting really intrigued with Oracle. I don't own any shares yet, but I'm telling you, there's a high probability I could buy it. I've done a lot of research in the company over the past week and a half to 2 weeks, and I'm pretty excited. The balance sheet's trash. Outside of that, everything else is pretty dang good with the company. And so, I don't know, man. At some point in time, I'm going to have to probably pull the trigger on Oracle, and it's coming sooner probably rather than later. But the problem is there's so many stocks to buy right now. That's the other problem.